That was interesting. Great. Good evening, everyone. I am yielding tonight to Madam Lara Okunobi. I'm Dr. Tony Okwesomi, Dr. O, and welcome to Medical Mondays with Dr. O. Without much ado, Madam Lara, the floor is yours.
Thank you so much to the Madam Lara fan club. Here we are. We're going to do it again tonight, right? You guys have to behave because the boss is watching. She's right there. The boss is right there. Boss lady right there. Well, I'm excited to be hosting today, and we have a very important topic. I say important because it concerns everybody that has been listening here on this platform. Today, we're expanding our conversation on wellness by exploring a topic that isn't discussed nearly enough: financial wellness. I know we touched on it a long time ago, but we're back. So whether you're a physician, an investor, a business, an entrepreneur, financial health influences every aspect of our lives. It's actually one of the number one causes of stress. It affects decisions we make, the risk we are willing to take. And our goal today is to better understand how thoughtful planning can help entrepreneurs, all of us, protect what we've worked so hard to build. Because, ladies and gentlemen, I tell you, the greatest asset you own is your ability to make consequential decisions before risk becomes a crisis. Our guest this evening, well, from everything Dr. Ho tells me, you're going to be amazed. But he has spent more than 25 years helping entrepreneurs and business professionals better understand how to maximize the benefits of business ownership. Whether you own a business today or you're aspiring to have one, we have to listen up. So throughout his career, he has founded and led successful businesses, developed educational programs for small business owners, authored business publication, and spoken to audiences across North America, because that's one of the places where Dr. Who fished him out. So his work focus on helping entrepreneurs think strategically about protecting their assets. That's the key word: strategy, about how you protect your assets and how you can reduce unnecessary tax burdens and creating a long-term financial security through proactive planning. So please join me in welcoming Mr. David Gibb, the Senior Vice President of Account at Legally Mine. Mr. Gibbs, you have the floor. Mr. Gibbs,
Beautiful.
no S.
Well, Laura, that was amazing. Thank you so much, Dr. O. Grateful for the opportunity to jump on the call tonight. You know, we connected a few months ago talking about this topic, and I forgot. Did you see us at do a presentation somewhere? How did we get connected? Do you remember?
I saw you, not you. I think it was the CEO at
One of
Medkai.
our presenters.
No, at Medkai. I was
That
on the board for Medkai. And we had a
okay, correct. Well,
program
great.
where
Well,
you were invited. Can you
well,
hear
that's
me?
usually how it works. Is people get to see us, they recommend us, they pass us along, and give us an opportunity to speak to their community. But again, my name's Dave Gibb. I'm as she said, I'm the senior vice president of account management at Legally Mine. I'm also an executive director there, and I've been there for 17 plus years. I love the company. I think we do amazing things for our clients. Now, as far as the screen that you're looking at, do you see follow along with the digital hand? Is that what you're
Yeah.
looking at right now from my screen?
Yes.
Okay. If I hit that, did the screen just advance to today's objectives?
It just says today's lecture.
No.
It doesn't say today's objectives, put more money in your pocket, create
There
the
we
legal
are. Yes,
strategies.
now it does.
Now it's okay.
It does say that. Okay, great. Okay, well, the QR code I had up there before, I will be putting that up again as we continue. So if you want to grab that just to follow along with the lecture that we're going to be talking about here today, but so don't feel bad if you didn't get that initial scan. I will be putting that back up again. But really, the objective today is to show you how to put
Mr.
more
Gibb,
money in your
sorry to
pocket.
interrupt you. Can you send that? Can you send that to Dr. O and he'll send it to our technical guru? They will put in the chat so that we don't get any distractions. We want to grab
that
all
QR code? Yeah.
whatever you've
Yeah,
got.
I'll do that after the I'll do that after the fact.
Okay. Thank you.
I'll do that after the fact so that they can get all. Thank you very much. I appreciate that. But you know the the two objectives. Number one is to put more money in your pocket, and how we do that is we actually help you keep more of what you earn, because there's two groups trying to take our money. Number one, the IRS. The IRS really looks at all the money being made here in the United States as their money, and we've got to figure out a way to navigate around that legally to maximize the tax benefit as you can get. But also the other group trying to take our money of the child. You can't turn around nowadays without seeing something about suing somebody. And anywhere you drive in the United States, you're going to see signs like this. And I didn't realize how bad it was until I saw this stat. The United States makes up 5% of the world's population, yet over 90% of all the lawsuits worldwide come from here, with over 30 million lawsuits filed last year alone. And that's a crazy number to think about. But they're not just suing anybody. They're suing people with money, suing people that have businesses that actually are trying to produce. And they're suing people that I'm talking to here today. The business owners, medical professionals, business owners, those that are producing in our country are the most sued group in the United States, and it's not even close when you look at the people getting sued. So you've got to figure a way to navigate around that. Now, there's two elements to every lawsuit. There's cause and there's motivation. Now, you cannot control the cause of a lawsuit here in the United States. A lawsuit can come at you at anywhere at any time for any amount of money, and there's nothing you can do to prevent the cause of a lawsuit. But what you can control and what you must control is the motivation in these lawsuits. And I bet you can guess what that motivation is, right? It's money. Money's the motivator. And so if you can take the motivation off the table, you can truly stop the lawsuits before they begin. Now, let me ask you this. How many of you ever heard of a homeless person being sued before? Doesn't happen, right? Well, the reason why, they don't have any money, they don't have any assets. Well, my goal here over the next 20 to 30 minutes is to show you how you can become homeless in the eyes of the courts. Because if there's nothing to gain, there'll be nothing to come after you on. And that's the goal here, is try to get this to go away before it begins. Now, the absolute worst way to own your assets is to put them in your own name. And the reason why this is such a big deal is if you get named in a lawsuit at your office, the judge can and will pierce the corporate veil, and then everything that's in your own personal name will be named in that lawsuit and become subject to the court. Think about it. How many of you have your home in your own name? Well, most of us do, right? We go out, get a mortgage, put it in our name. Well, folks, if you got named in a lawsuit, that could definitely be named in that lawsuit because it's in your name. You've got to get it out of your own name. And what do? Well, you put them into legal entities, all of your different personal assets and business assets. But you can't just run around throwing any asset into any entity. You may need to make sure it's the right entity for the right asset. Make sure you put that in a state that actually is going to give you asset protection. And lastly, make sure you have the right verbiage. And if you can have these three things put together you can actually have some good asset protection. Now, folks, my screen should have advanced to strategy number one, family limited partnership. Is that what you're looking at right now?
Not yet.
The worst way to
It
own
doesn't
your
say
assets.
family limited partnership.
No, it's not there yet. Maybe the next one.
What slide are you looking at right now?
Okay, we're right here now where you want us to be. The asset protection must include the following.
Well, okay, hold on. It should say strategy number one, family limited partnership. Not there yet?
We just got there now.
Okay, so it's a kind of a delayed, it sounds like. So, and it says general partner, limited partners, and then management company. Are you seeing all that?
Yes.
Okay. All right. Well, the first strategy.
I'm sorry, hold on a second. Dr. AJ, just so we're not confusing, I'm going to leave the responses to you because you're in technical stuff. I have another chief that's helping Dr. O.
Okay. All right. Well, that's great. That's great. But right now you can see family limited partnership on the screen.
That's correct.
Okay. All right. So it's a little delayed, but that's okay. We can make that work. So family limited partnership. Now they've been around for a long time. They came to the United States back in 1913, and they came because the United States put into place the 16th Amendment, which was the first time that we could be taxed as individuals. And the reason why this was such a big deal back in 1913 is because at that time there were a lot of companies that were solely owned by individuals. So when they died, the IRS was going to come in and take 50% of these companies. Well, that was going to put these companies out of business. So they had to figure some way out to structure these companies so that that wouldn't happen. And what they came up with was the family limited partnership. Now, family limited partnership was built differently than most entities in the United States. If you want to have total control of an entity or a business in the United States, you have to own 51% to have total control. Well, the family limited partnership, it was different. You only had to own 2% to have total control of the entity. And so this worked in the courts. Now, actually, in the very beginning, the trial attorneys looked at all this and they went, well, we think you can't be the general partner and limited partners in your own family limited partnership. So what they started to do was to create a management company to be the general partner. Now, let me explain how my wife and I are structured to help you understand why we do this. Let's say we create we create a family limited partnership, and we created a management company to be the general partner. Now, my wife and I split that management company 50-50 for equal ownership. We gave that management company 2% ownership of our family limited partnership and made it the general partner. And then my wife and I split the other 98% for a total of 100% ownership. Now, if I put all of my assets inside of this family limited partnership and I get named in a lawsuit, what percentage can be named? Well, only 2%. And unless my name's Bill Gates or Warren Buffett, who wants 2% of my assets? This was the beginning of asset protection. And it was a great thing, the way that it was structured, because of how it can protect you. Now, one thing I need to understand, in the very beginning, courts didn't like this because they said you can't be the general partner and limited partners, but that's why that management company was created. Now, over the years, we started putting all of our clients into these family limited partnerships, and they were being sued. And quite frankly, at the lower court levels, the courts were ruling against them because they'd never seen this before, but they were appealing it to the federal level, and we were winning every time in court until in 1972 in the Ninth Circuit Court in San Francisco, the judge ruled against the family limited partnership and ordered all the assets out. Now, just so you know, it was a great thing for asset protection because we appealed it to the Supreme Court. And in 1974, the Supreme Court finally got to see this, and they ruled 9-0 in favor of the family limited partnership, which cemented it as an unbelievable, unbreakable asset protection tool. And since 1974, we have never seen one of these entities broken as long as they were put into place before you get sued. Now, if you're in the middle of a lawsuit right now, you couldn't create one of these things. That'd be a fraudulent conveyance. You get in trouble for that. But if you can get structured before the lawsuit's filed, hasn't been broken since 74. Just a great asset protection tool. Now, what type of assets would you put into a family limited partnership? First ones I'm going to talk about are considered your safe assets. This is like your bank accounts, your investment accounts, retirement accounts, jewelry, things that aren't going to cause lawsuits on their own. This is, for example, nobody's going to trip over your bank account and sue you. It's not a physical asset. And so you can lump all these different safe assets into one entity. And that's why a family limited partnership is so good. So what about your high risk assets, like your home, like your office, like your equipment, like your car? Your car's a rolling lawsuit waiting to happen. So You can't lump that into the same entity as you can like a safe asset. You have to separate these out. The problem is, if you price up family limited partnerships, those are easily $10,000 a piece. So if you had to create separate entities for all of these different assets, it just would be too much money. And so about well, in the mid 1980s, a group of former employees of ours who are now state legislators in Wyoming set out to create an entity that would be better for real property, but also would be less expensive. And what they came up with was the LLC. Now, the LLC is the most used document in the world. Over 100 countries have LLCs. All 50 states, they have their own version now. And I bet if I asked you by a show of hands how many of you have an LLC, you'd probably all raise it. We all know what LLCs do. And they were great in the beginning. And the reason why they were so good is because they put inside those documents something called the charging order. Now, the charging order was passed in all 50 states. And what this was supposed to do was to limit what the judge could take in a lawsuit to only distributions. But you think about it, you put your home in a LLC and you get sued, and the judge comes to take the home, and you say, Judge can't take the home, it's in an LLC. Well, the judge can take the distributions from your home. But the thing is, how many distributions does your home pay you? Nothing. This is why it was so beautiful, because the trial attorneys looked at this and they said, oh my goodness, we're not going to be able to get any money. We can't take the real property. We can only get distributions. And these people are putting their homes into these type of assets or these entities. And it became a real deterrence. It was a great thing for asset protection. Now, a lot of people will take these LLCs and they'll make mistakes. They'll take one LLC and they'll drop multiple assets into the same LLC. The problem with that is if something happens to one of them, every one of those assets can be named. So what do you need to do? Well, you need to take those high-risk assets and separate those out into separate entities. So if something happens to one of them, yeah, you'll lose some value there and you'll have to fight that lawsuit. But everything else will be separate and not be able to be taken in that lawsuit. And this is an important part of asset protection, is dividing out those assets. Now, who uses these strategies? First one I'm going to talk about is Disney, multi-billion-dollar company. Disney has parks all around the world, millions of people going through those gates every year. Seems like a lot of liability. Well, in order for me to go to Disney, let me take it a step back. If I had to come into your office or into your business and to do business with you for the first time, I'm going to have to fill out some liability paperwork, and I understand that. But how does Disney do this? Because I go to Disneyland, I don't have to fill out any paperwork. All I have to do is buy a ticket. So how we found out Disney's doing the exact same thing that we've been talking about, and that's dividing up their assets using LLCs. We had a family we heard of a family going to Disneyland. They took their elderly grandmother on the Big Thunder Mountain Railroad. Now, if you don't know what that is, it's a roller coaster. But right on the roller coaster, it says if you've got back problems, heart problems, if you're elderly, don't get on this ride. It can cause some problems. Well, they put their grandmother on the ride, and sure enough, she had a heart attack. They decided to sue Disney. Well, when they started digging, they found that Disney said, let's take a look at the tape. And they brought him in. They said, folks, this is your grandmother. She's getting on the third car of the railroad. That third car, by the way, is Goofy Car Number 3 LLC. What Disney has done is divided up every car into separate entities. And they said, folks, your lawsuit's not with Disney. It's with Goofy Car Number 3 LLC. And how much money does Goofy Car Number 3 LLC make for Disney? Nothing. So what do you think happened to the lawsuit? It went away. There's nothing to gain. What's the purpose of suing Disney if you can't get anything? We actually had a doctor down in Arkansas get sideswiped in a Walmart parking lot and decided to sue Walmart. Well, when they started digging, they found that the Walmart store was in one LLC and the parking lot was in another LLC. And how can you name a parking lot? There's nothing to get there. There's no real property because it's in an LLC. How much did you park to pay at the Walmart parking lot? Nothing. So there's nothing to gain. There's no distributions, nothing to get out of it. What do you think happened to that lawsuit? Well, it went away. Well, this is what these major corporations do to keep themselves out of lawsuits. Why aren't we all doing it? And most people say, well, they've got millions of dollars to spend in asset protection, and that's true. But what we're talking about does not cost very much money to structure it. So really what it comes down to is you've probably never heard of this before. How much time did you spend in school talking about asset protection? most people I talk to, maybe one day. So really, when we get out of school, we're kind of left on our own to figure this out on our own. And that's why, again, business owners, property owners, asset owners are the most sued group in the United States, because we're not trained to protect ourselves and to get ourselves structured the right way. But if you do it, you can actually protect your assets. Now, one thing that I find that even very sophisticated investors make this mistake is they put their assets and their entities in a state that won't give them good asset protection. So this leads us to strategy number 3, and that's to create a holding company and put that holding company in a state that does give you good asset protection, and then registering all your LLCs into that holding company. The reason why this is such a big deal, in most states in the United States, the judge can dissolve your entity at will. What does that mean? Well, if you've got property in any state, most states out there, and you get sued, and let's say that property's in an LLC, well, the judge can dissolve that LLC, take that LLC off of your name, put the property back in your name, and then tell you if you win this lawsuit that you'll be able to keep that property and we'll put it back in the LLC. But what happened to your asset protection? It was gone if that LLC gets dissolved. Most states, the judge can seize assets, and most states, the judge can actually foreclose on your membership in your LLC and give it to the plaintiff. These are all things that are huge negatives, and most states, they can do this. There's only really 3 states that can protect you. Number 1, Delaware. It's been the longest used asset protection state. If you look at your credit card statements, most of those companies are registered in the state of Delaware, and it's for asset protection purposes. The second state is Wyoming. Most innovative. They're the ones that came up with the LLC. But by far the best asset protection state that we found for a holding company is the state of Alaska. And the reason why the state of Alaska is so good is because they have the strongest charging order in the United States. And what does that mean? Well, if you've got property and it's located in the state of Utah or Pennsylvania or New York or Florida, and you get named in a lawsuit, the judge in that state has to use the laws of Alaska, because that property is now registered in the state of Alaska. And by law in Alaska, they cannot dissolve an entity at will. They can't seize assets, and they cannot foreclose on the membership. This is such a vital part of asset protection that most even good investors miss, is to create a holding company to put those assets in to protect them from the poor state laws that they can run into. Now, that's your real property. What about your money? Because we can actually show you how you can protect all of your assets, your real assets, but what about your money? Well, the trial attorney started focusing on the money. And what they did is they put into every document in the United States something called a pro rata distribution clause. The pro rata distribution clause allowed the judge to take financial control of your entity. What does this mean? Well, if you get caught in a lawsuit, and let me actually give you an example. We had a doctor actually here in Utah that had a patient leaving for the day. As they were walking out, the receptionist called her back in and said, "Hey, you need to get your reminder notice." She turned around to come back in. A big heavy wind gust came up, hit the door, knocked her to the ground. She hit her head on the floor, and she lost her ability for taste and smell. Well, that was a horrible situation for her. She'd spent about 8 months trying to get that rehabbing and getting that back. Never came back, so she decided to sue the doctor to get her money back. Well, do you think the attorney stopped at the $80,000 of expenses that she had? No, they went for everything. They looked and said, this doctor has assets. They're not protected. Let's go for it. Well, they went to court, and I won't get into all the details of the court and how it went down, but I will tell you at the end of the day, this doctor lost a $5.2 million judgment against him for doing what? Nothing. Had nothing to do with his practice. It was wind that he didn't own. The door hit her, yes, knocked her to the ground. He had nothing to do with it. So what happened? Well, the first $1 million, he had a $1 million insurance policy. That got paid out directly to the plaintiff. Second $1 million came out of his umbrella policy, but he still owed $3.2 million. So what'd the judge do? Well, he didn't take control of the entity because he said, well, that's the moneymaker. Let's go after the other money. So they pierced the corporate veil, went after his home, checking accounts, investment accounts, anything else he owned was gone. And at the end of the day, after liquidating all of that, he still owed over $1 million. So what did the judge do? Well, because the doctor had a pro rata distribution clause, the judge took financial control of his entity, and he said, "Doctor, from now on, you're going to make $50,000 a year. That's it. Anything else that you make is going to come out as a distribution that'll be paid to that plaintiff until you pay her off that last $1 million." Now, folks, how would that affect you today? It's tough to live off $50,000, but there's nothing you can do to build your business in a better way, because all that money, anything you build more, is going to go directly to the plaintiff until you pay her off. Now, when you go to your local attorney and have them create a document for you, they don't create these from scratch. They use templated software. Well, guess who writes the software? The trial attorneys do. And are they going to do it to benefit you or benefit them? We reviewed over 3,000 documents from business owners all around the country that are clients of ours. And we did that last year alone. Out of 3,000 business owners, not one of them had this written correctly. Every one of them had a pro rata distribution clause that would have allowed the judge to take financial control had they been named in a lawsuit. So what do? Well, you need to get your entity correct and change the verbiage to a non-pro rata distribution clause. What this does is it effectively blocks the judge. The judge can no longer order distribution. Only the general partner can order it. And who is that general partner? Well, you are. Are you going to order a distribution of money that you don't believe should go to somebody else? Heck no. And there's nobody that can force you to do that. Now, if you were in a case where that happened and you actually were trying to get that money from the plaintiff, and all of a sudden you found out they weren't going to give it to you and the judge had no right to give it to you, you're not going to be too happy about that. But you know what? There's other people that aren't happy about it. Number one, people that weren't happy, the trial attorneys were not happy about this because they couldn't get after the money. But bigger than that, the IRS was not happy about it, because the IRS could see if somebody sued me for $1 million and I didn't pay them because of my distribution clause, the IRS, if I would have got that money, I would have had to pay taxes on that money. And now that I'm not going to get that because the general partner is never going to distribute it, well, the IRS wasn't happy about this because they were going to lose out. So this became a huge it was a very unexpected, huge advantage, where the IRS came up with IRS ruling 77-137, which states, now this is important, listen closely, a plaintiff using the charging order will have to pay income tax on any monetary judgment, even if there's no distribution from the defendant. Folks, did you see what happened there? If you sue me for $1 million and I have a non-pro rata distribution clause, and my assets are covered because of all the asset protection I have, and at the end of the day, it's up to me to decide if I want to give you $1 million and I don't give it to you, well, if I choose not to give that based upon my wording and my documentation, you will now owe taxes on money you won't get. We call that the revenge clause at our office, because there is not one attorney in this country who will touch a properly drafted family limited partnership or LLC, because if they do, not only will their client not get any money, but they'll owe taxes on money they won't get. This is a huge part of asset protection, because if you can take away the motivation, the lawsuit will stop. That's what you use family limited partnerships for. That's what you do LLCs for. Get a holding company put into place, and then make sure that verbiage is correct. If you can do that, you can truly stop lawsuits before they begin. Now, folks, does the screen show no lawsuits continue right now?
That's correct.
Okay, good. So we're caught up. Awesome. All right. So once you get this all put into place for asset protection, what happens when you die? Most people say, well, I'll make sure all my assets go to my children or my heirs. Well, that's great, but it's not just going to happen on its own. You need to do something about this. And that's why we're going to talk about trusts here for a minute. Now, there's different types of trusts, revocable and irrevocable. Let's start with irrevocable. If you create an irrevocable trust today, you've just made a permanent decision for the rest of your life. You can't change anything to that trust, and you can't be the beneficiary of your own trust. So usually you put that into one of your children's names, for example. The problem with that is, let's say you're 40 years old, you create an irrevocable trust and you drop your home in that trust. Well, 40 years later, now you're 80, you're feeling pretty good, you want to stay in the home, but the kids want you out of the home. Well, guess what? you're moving. You gave up the right to live in that home 40 years ago by putting it in a trust and making someone else the beneficiary. You lost that control. So irrevocable trust is not a great tool while you're alive. So we talk about revocable trust. Revocable trusts are changeable trusts that are usable, that you can make adjustments to and so forth. Change the beneficiary, add things to it, take things out. And it won't protect your assets while you're alive, but that's why you have LLCs and family limited partnerships and holding companies. But when you die, that revocable trust now becomes irrevocable and it's not disputable. Now, let me explain the difference between a will and a trust. If you have a will on its own, that's a good thing, but you honestly, if you don't have a trust attached to it, you might as well blow your nose in that thing and throw it away. Now, I joke about that a little bit, but it's really, they're worthless by themselves. You've got to have that will inside of the trust. And the reason why is because when you die, it becomes irrevocable and it's not disputable, which means there's no court, no judge that can overturn this trust. No brother or sister or sibling can come in and argue and fight over the money that's in the trust because it's in an irrevocable trust. And the way I look at it is you make the money, you should decide where that money goes. No judge should be able to decide where that goes after you die. And that's why it's so important to have a trust put into place. Also, it will avoid probate. And so that's a nightmare that you'd have to go through to pass your assets to your heirs, but it'll avoid it completely if you put your assets into that trust. Now, trusts are expensive documents. Most places in the United States, you'll spend $5,000 to $10,000 to create a trust. But it is something everyone needs before they die. The problem is we just don't know when that's going to happen. And that's why we bring that up. And Legally Mine does deal in trusts. And that's why I want to bring that up as well, is because it's part of your asset protection. Oh, and by the way, if you own a trust, if you're married and you have a trust, you can pass up to $15 million to your heirs tax-free. So you can keep more money within the family by putting that trust together. And obviously, many people are concerned about taxes. So let's talk about taxes for a minute here. I don't know how many of you have seen the tax code book, but it's about that thick. Right on the cover, it says this: it's the responsibility of every American citizen to ensure that they do not overpay on their taxes. Well, guys, that's just code speak for good luck. Good luck trying to figure this out on your own. Yeah, good luck trying to take that and try to figure that out. So what do? You go to your local accountant, your CPA, and try to get some help. Well, the problem is most of us do that at the wrong time of year. We go in, February, March, as we're leading up to tax season. Your accountant is doing as many tax returns as they possibly can during that time. All you're doing is slowing them down, coming in with LLCs and family limited partnerships and trusts and trying to work with them on saving money on taxes. When you should be talking to them is actually in October and November, when you can actually make a difference on your taxes for the following year. But honestly, this isn't what most accountants do. Their job is not to find you ways to save money on taxes. Their job is to get through as many tax returns as you possibly can, or as many as they can possibly do, because that's their revenue. That's how they make money. And that's why over 73% of Americans overpay on their taxes. So what you need to do to get on your team is somebody that actually is their job, and that is hire a tax strategist. Tax strategists can leverage these assets and create tax advantages and estate planning by using these different entities to actually save you some money on taxes. And that is their job to do that. Now, a couple of deductions that you can take that are really simple, we'll go through. FICA tax reduction using an S corporation salary. If right now, if you're making over $200,000 a year and you are a sole proprietorship or a partnership, and your accountant hasn't told you to change to an S corporation, honestly, you need to fire the accountant. They're losing you money every year. Let me explain why. Let's say you're bringing in $200,000 a year and you're paying yourself as a W-2 employee. Well, that first $100,000 you'll have to pay as a W-2 employee. That money goes out, and you'll have to pay FICA tax on that money, which is about 15%. But the second $100,000, don't take it as a W-2 income. Take it as a distribution. Distributions don't have to pay FICA tax. And so so by just making a simple structure change to the way you pay yourself from a partnership to an S corporation, you'd save about $15,000 in taxes. Another deduction that's really good is the licensed professional deduction, the QBI. This is for people who make less than $425,000 a year, $465,000 a year, and they are licensed to do their job. If you do that, you get to knock 20% off of your gross income. Why does that matter? Well, let's say you're bringing in $1 million. And let's say with all of your different tax deductions, at the end of the day, you made 400 grand. Well, on that $400,000, you'd owe about $150,000 in tax. Well, because you made under 465, you can take the QBI, and instead of starting at $1 million, you start at $800,000, take the same deductions, and at the end of the day, instead of showing the IRS you made 400 grand, you just show them you made $200,000. Who wouldn't want to pay taxes on 200 grand rather than 400? Well, it's a kind of a silly question, but you can do that by using the licensed professional deduction, or the QBI. Just a great way to save money on taxes. Another deduction that's really good, even for people that don't own businesses. This is the income shifting for college students or minors. Did you know you can, if you have an entity created for asset protection for your safe assets, and you have a management company that's created to manage that, that management company is a legitimate business that you can take business deductions on. One of the deductions that's a great one is income shifting to your children. You know, how many of you have children that are going to school or going to band or sports, and you're paying money out of your own pocket to pay for those? Well, most of us do that. Stop paying the kids, paying the studios directly, pay the kids. Let the kids pay for their school and for their activities and so forth. And whatever's left over, you can pass that on to retirement or for education. But the bottom line is you can pass that up to $15,000 to your kids every year, and they don't have to pay taxes on that money or file a tax return, and you get a $15,000 deduction, which most of you would save about $7,000 in taxes just by making that simple change to the way you pay your kids. Or the way you shift your income. And you do that through your family limited partnership. You can do this with college students. You can do it with elderly parents. You can do it with grandchildren. It's just being smart with the way you move money. And you can do that within your family limited partnership. Another one that's a great one, even for W-2 employees, is IRC Section 288G. This is renting your home up to 14 days and for business meetings. Now, as business owners, you're required by law to have at least one meeting every year. Don't go out and rent a hotel space or a restaurant. Rent your home from yourself and pay yourself for that rental. Now, how much do you pay yourself? Well, you pay yourself the industry average for rental space in America is $2,000 a day. Now, with this 288G deduction, you can rent your home up to 14 days. What is it? So how do you do that? Well, you hold 12 meetings throughout the year, and then do a biannual meeting twice a year that will be added on top of that. You can get to 14 meetings pretty easily. Don't go over 14 because you have to pay taxes on the whole thing. But if you can go to 14, everything up to 14 is now tax deductible. So you take that $2,000 a day for rental, times that by 14 days, that's a $28,000 deduction. Why does that matter? Well, when you're filling out your 1040 form on line 12, it asks you if you have a business profit or loss. You drop that $28,000 in there, you just saved about $10,000 to $12,000 in taxes just by doing something that the IRS requires you to do, and that's to have your business meetings. Now, you have to keep minutes of the meetings, and there's some things you have to do with that. Legally Mind will do that for you. That's part of what we do as our services. Everything we've talked about so far is inclusive in our pricing, but we do put you into some advanced tax strategies that we can actually save you a lot more money than what we've talked about already. And that would be through R&D credits, captive insurance plans, and structured loss plans. Once you get into our programs, literally, we've got doctors and business owners saving on average of about $60,000 a year just in taxes just by using those. And just so you know, those are not included in our pricing. You pay a little bit more, but that would come out of the money that you save And I do want to be really upfront on that. Everything else is inclusive, though, included in our pricing and so forth. Now, what does this all cost you to do this? You go out and you try to do this on your own, try to find an attorney. First of all, it's going to be tough to find someone that knows what they're doing. But if you found somebody, it's going to be expensive. Usually this is boutique firms that do this. For this simple little structure, you'd spend between $25,000 to $45,000, and it would still be worth it because it would protect your assets. But the biggest part of this is the frustration of trying to get multiple different law firms on the same page to help you out. You'd have to get an estate planning law firm, an asset protection law firm, and then a tax strategist to agree with one another. Good luck. That's the frustrating part about doing this, is trying to get everybody on the same page. Well, Legally Mind does things differently. We put all this underneath one roof. We have in-house estate planning attorneys, asset protection attorneys, tax strategists that work in conjunction one with another. And because of that, we can charge about half of what you'd spend anywhere else. Our everyday price is $13,800 for structuring assets for anybody out there. Now, when we do events like this where we speak to multiple people, we actually do some price breaks. We reduce our cost down to $9,800 for this same package, the 13.8. And because of our relationship with Dr. O, we reduced that price for the people on this call to $9,800. Now that's on unlimited. That's whenever you decide you want to do this, we will take advantage of this, but it's not open-ended. You need to make an appointment when we're done with this conversation to see if it's something that makes sense for you. But if you do that, we can give you this pricing. But let me do a quick breakdown of what this cost is. The reduced cost price of our program is $9,800. That's a one-time fee. You pay it once, you never pay it again. That's for unlimited entities now and throughout your entire life. You'll never pay for another entity. You create another business 5 years from now, we'll create that entity for free for you. You buy a new property, we'll create that entity for free for you. You do an investment with a friend and you need an LLC created, we'll do that for free for you forever. That's included with that one-time fee of $9,800. Then you pay us $200 a month to manage this. Everybody has to pay us that $200 the first year, but after that first year, then you can decide if you want to do business with us continuing forward. And that would be the only other cost you'd have with our company, is for us to manage it if you wanted us to do that. If you're organized, you can manage it. You're on your own and you can take it. You wouldn't owe us another dime. But if we are saving you $20,000, $30,000 a year in taxes, if we do just so much business benefit to you business-wise that it makes sense, then you can pay us $200 a month, and that will never go up, and we will manage your asset protection, including give you an asset protection plan, estate planning plan, and a tax plan every year. And you'd have access to our attorneys. Anytime you need to talk to an attorney, you can do that. There's no cost for that. We take care of registering your state registrations for these different entities. We're not going to pay for that out of our own pocket. That is another fee. And so really the only two fees you have outside of the initial sign up is for the $200 for maintenance that you can cancel anytime after the first year, and then your state filing fees. Other than that, everything is inclusive and it will never go up. That's part of what our program is. And really how I look at this is this. If you need a trust, I can get you a trust to protect for the inevitable. That includes a last will and testament as well. We can actually protect your home, protect your business, protect all of your real assets, all covered with this program. And if I could show you one strategy that could pay for the whole thing through tax savings, who wouldn't do that? We try to make this as easy as possible for somebody to make a decision, but we even go one step further, as we guarantee it. If we can't save you at least $9,800 in new taxes, we don't deserve your money and we'll give it back to you. It's put in writing from the CEO of our company. Now, I usually go through some testimonials here. Dr. O would probably be our bet, but somebody you actually know that has heard about us and knows that of our reputation and so forth. But so you can talk to Dr. O, but also Dr. Brian Anipsiak, editor-in-chief of the American Journal of Orthopedics. He basically said, as healthcare professionals, we spend a lot of time caring for other people. We often forget the time to take care of ourselves and our families. And isn't that true? You get so caught up in life and business and worried about all the things that happen. And there's a lot going on that we forget to take care of ourselves. Take 5 minutes, enroll in our program. It's going to take 4 to 5 months to put it all together. I'm not going to lie. It takes some time to get it done. But once you get it done, you will never have to deal with this ever again, and we'll manage it moving forward. And that's what Legally Mind has been doing for about 20 years now for business owners and medical professionals all around the country. Folks, that is my presentation. Any questions before I sign off?
Oh, no, you can't go just yet. You've got to hang on. We have to process all of this. But thank you very much. That was a very robust informational session. But I want to say this to all of us attending this today. At the beginning of every year, many of us set ambitious goals, right? We write them down, we're excited about them, and we genuinely intend to achieve them. But by the end of the year, many people find themselves exactly where they started, not because those goals were not meaningful, but because nothing meaningful happened when they missed those goals. There was no accountability, no change in behavior, no action to move them forward. The same thing can happen today or in webinars like this. We can spend 1 hour, 2 hours, 3 hours listening, take pages of notes, and leave inspired. But if we haven't taken a single action in the next 6 months from now, then all we have just done is collected information. There will be no transformation. Mr. Gibb, you did a fantastic job today. There's a lot of information that even I didn't know. But there's something in it for everybody. Where were you when my kids were in college? I could have been saving all of this money.
I know. I get a lot of that because they're just like, oh my goodness, I could have saved so much money. You're right. Hey, you know what? Live and learn. Now just make the decision to move forward.
That's right. So the people in here, we're very organized. We would definitely have questions. I already see some hands up. But at the end of the meeting, you would tell us, I'm sure you will share your contact, how people make an appointment with you just to get some quick diagnosis of their situation, the financial situation, and then they can go from there to make an intelligent decision about whether they want to work with you or not. But let me tell you something. Yeah, 9,800 sounds like a lot. I'm sure you have a payment plan, right?
We have payment plans, and honestly, we do have other different packages. The one I showed you today is our professional package. That's for unlimited entities. But if you don't need unlimited entities and you're not a business necessarily going to grow your business even bigger, if you don't need other assets, or entities, we can actually reduce the cost on some different things to help you out.
Yeah, because I truly want everybody here to take advantage of the information today. There's Jenny Sarrett. This Dr. O also runs another nonprofit that does free medical mission in Nigeria. So when you save money through this product, try to donate to that other mission to support. It's also about promoting life. So Auntie Tawa, Mrs. Dirojaye, please unmute and ask your question.
Thank you, Madam Lara. How are you doing? Dr. Gibbs, thank you for the information. You did a good job. Thank you.
You're welcome.
Yeah, so when you were presenting this information, you mentioned about trust and you mentioned Wyoming. You mentioned there's another one, and Alaska.
And
there are 3 of them. You mentioned
Delaware as well.
Delaware. Yes, okay. But what about Nevada?
Nevada used to be a good asset protection state, but the problem with Nevada is that they've accepted the California law of dissolution of the entity. So if you get, for example, if you got sued in California and you had a property, a holding company set up in Nevada, the Nevada judge now will follow the California law and dissolve the entity at will. So Nevada used to be a great asset protection state, no longer.
Okay. So my other question is, you talk about the wills and the trust and the living will. Um, how does your company manage it? Does your tax CPA I can call them anytime if I pay the maintenance fee, and can I?
Yep.
You said you can bring other thing you want to add. Then,
Yep.
if most of the things that you have, if let's say it's real estate, can you obtain the deeds directly, or do I
Yeah.
still?
It's all public record. It's real easy to get.
Yes.
But yeah, we will work with you anytime you want to call in and set an appointment. It's not, you can't just call. We're not going to be at your beck and call, the second you call in. But if you call in and set an appointment, then we'll meet with you for as many times as you'd like, and we schedule an hour and a half appointments as well, so you can get as many questions as you want to answer.
Thank you, sir.
Well, thank you very much. Again, knowledge has the power to change our lives, but only when it changes our behavior. A lot of things have been said today that I believe everybody on this platform can benefit from. If you own a home, even if the gardener or whoever it is falls on your ground, do you know you could get sued in your own house? If your kids have, I mean, in California though, California is a sue city.
It is. It is.
So,
But you
so
know
my,
what?
yeah,
States, it's just the nature of people nowadays. They've trial attorneys have really pitted us against one another. And that's not how it used to be. And so you need to protect yourself because that's the reality of what we deal with here in the United States.
yeah. So I'm hoping that today's information inspires at least one decisions uh, that improves our future. So if you don't have a will, if you don't have a living trust, any of those things, it's time to think about those things.
All right.
As immigrants, we work very, very hard in this country.
And we
So
and we do program we have programs that just focus on a will and a trust as well. And so
okay,
there, if you're just interested in that part of our package, we have that. But then, we've got up to the professional package that gives you unlimited entities. So there's a range of things that we can work with you on. And that QR code in the middle of the screen there is the one that you'd set an appointment with me at. The problem is I'm going out of town for a week to a place where there is no reception. I can't even talk to you. I'm going to a place called Lake Powell. It's one of my favorite lakes in the world, but it happens to be this coming week. So I will send my QR code to Dr. O, and she can pass that on to you so you can set an appointment. And I will extend out the appointment schedule for 2 weeks rather than just the 1 week to get the discounted pricing. But I do have some appointments still available tomorrow if you want to find some time tomorrow.
okay. There's a question here in the chat says, can an LLC be placed into a revocable living trust? What are the benefits for doing so?
It's a good question. Yeah, absolutely. You want to make sure all of your assets, including all of your LLCs, are included in your trust. You don't want, and that's a lot of people make that mistake is they'll create a trust and they'll forget about it. But all of a sudden you get a new asset 5 years later, you create an LLC 5 years later, and that doesn't get put inside that trust. When you die, it's not part of the trust. So yes, you can definitely put that. You'd want that trust inside there or excuse me, that LLC, because that's ownership into a business.
Yeah. Another question I want to ask, okay, I see uh Dr. Manasseh, please unmute and ask your question. And then Dr. Veronica.
Well, thank you very much, Dr. Tawa and Dr. Gibb. Thank you so much for eloquently presenting this very, very instrumental and I would say strategic information that we need to have so we can protect ourselves with the money that we are working our sweats to. And you've answered the question correctly, and I appreciate that. Thank you so much. I was also thinking of the revocable trust in the sense that you mentioned only after death, that's when you can make changes or what have you. or were you referring to the irrevocable one or the revocable one? Because I'm under the impression that you can actually make changes with the revocable one, even at the point when you are incapacitated, with regards to the next of kin, whoever is going to take over when you are not able to now do what you normally would do in the able body. So I'm just trying to get some clarity on that as well. And also, I saw your 9800, 98, the package there. Would you also break down if there's like a la carte, like piece by piece? Somebody would just want you to focus on maybe just asset management or asset protection and nothing else, but they have something going on with their will and trust or whatever. You just the revocable trust. Thank you.
Okay, so the revocable trust, changeable trust, as you said. So yes, there's you can make as many changes you'd like to that trust all along the way until you die. Upon death is when it becomes irrevocable and is no longer changeable and adjustable. But that's the great question, because but that's the reason why it can't protect your assets while you're alive, because it is irrevocable, it's changeable. But that's again why we have those LLCs, family limited partnerships, and holding companies to protect all of your assets while you're alive. And then once you die, as long as all of those assets are inside of that revocable trust, now it will become irrevocable and will not be able to be disputed, and it will lock everything into place. And the other part of your question, I forgot the other part of your question real quickly.
Yes, and thank you. So I was also trying to understand regards to your package. Do you have like a la carte, like where you
Gotcha.
can break bit by piece rather
Gotcha.
than the whole
Yes.
package?
Yeah. We do a la carte, but usually the a la carte pricing adds up to be more than what our package pricing is. We can break that down for you, but it's all individual. So if someone just needs a trust, we can talk about that. But generally, they need a trust, but they also need something to protect their safe assets. And so a family limited partnership would have to be put into place, and then a management company because they want some tax benefit, and that management company's put into place to do that. So all of a sudden, we get into some of these a la carte pricing, and we're up and above what the cost is. So it just makes more sense to go with our package pricing.
Thank you very much.
But I can break that
Sorry.
all down for you individually, once we get on and find out exactly what different people need.
Sure, thank you.
But we do have
Dr.
programs that start. Oh, sorry.
Okay, so thank you. Hi, Dr. O, Madam Chair. Thank you for great facilitating. Dr. Gibb, that was shocking good information. So here we are. When you have a vacations club ownership, I'm just hearing from all these ads that they can come after your assets that you already have in the trust. What do you do to secure, especially when, for example, you may have canceled some of those vacation clubs? What are the threats to your children when you're not here for them fighting for your properties with your children? How do you secure, and what's vulnerable? Thank you.
Yeah. Well, the trust by itself is going to make it so the kids don't argue. Because once you die, that trust becomes irrevocable. And so now there's no arguing that goes on. I've got 5 children myself, and I always joke about it and say, do you think there's any chance one of those 5 kids is not going to be happy with the amount of money I leave them? And then I say, well, I kind of know exactly which one it's going to be. Now I joke about that, but how many of us have heard of problems with siblings fighting over money? Well, it happens all the time. Well, if you have a trust put into place, it doesn't matter. They can't fight. There's no fighting.
Okay.
It's not disputable, so no judge is able to turn that over.
What effort do you have to make sure that, do you have to do anything else? Do you have to name all the vacation clubs, the blah blah blah? What do you?
Yeah, all that would be listed within the trust, and that would be for estate planning purposes. And then outside of estate planning purposes, you'd want to put all of those vacation clubs into LLCs as well, because they've got value to somebody else that they want to sue you and take.
Okay, I tried setting an appointment, was just tomorrow, and I'm not available tomorrow. So I'll try when you come back from the lake.
Okay, perfect. Perfect.
Yeah.
I'm going to extend out. I will pass like I said, a new QR code to Dr. O.
Okay.
And when I get back, and then you guys can schedule that out to make sure that you can take advantage of the pricing that we have.
Sorry, out of curiosity, where is the lake? Where is that?
It's
Are
in
you
southern
going there?
Utah.
Oh,
It's in
Utah.
it's in southern Utah. They basically took the Grand Canyon and put a dam on it and then filled it full of water. It's
Oh,
amazing place, but there's no cell phones, no TV. My family. It's the greatest place on earth for our family because the kids get to disconnect, and it's a beautiful place.
thank you.
Yeah. So just for clarity, in your presentation, I have two other hands up. A lot of people are very comfortable with the revocable trust, revocable living trust. Yes. But you're saying, yes, it has its blessing because you can use it to your advantage, to your benefit until the time you die. However, it also leaves you open to potential lawsuit because it's revocable. The judge
Yeah,
can order everything that you put in there, order it to be asset,
you're right.
right?
Yep.
Okay,
That's why you don't just put assets in your own name into your trust. You put them
got
into
it.
LLCs and family limited partnerships and holding companies, and then the trust holds those. And it's again because they're not going to be protected by the trust. The trust is there for when you die. That's what you have that trust for.
I mean, with some, okay, okay. So the that whoever has a revocable trust needs to revisit that. You need to put it under a name that is not yours so that, I mean, you're not trying to hide it, but you're protecting your asset, you know. In other words, yeah, you're protecting your asset. So you can put
Yeah.
it along Logmoju
If
LLC. Just
if
kidding.
you have a trust already, we can review that trust for you to make sure that
Yes,
it's actually structured properly. That's
yes,
part of
yes.
that's part of the $200 a month in that consulting that we do.
I see. Very well. Okay. At some point, you will involve attorneys because you are not an attorney.
No, we will definitely have our attorneys come into play. How it breaks down is the first appointments with the paralegal. That's just for us to ascertain, who you are, what assets you own, what you need protection of. Then they turn it over to the legal team who builds out a blueprint, and then you'll get on the phone with an attorney who will break that blueprint down for you. In the meantime, they'll start on estate planning as well as tax strategies to start working on with the different divisions of our company.
Got it. Uh, who is a Zoom user? What is your name?
I'm not sure if it's me, but it may be me. This is Sade Aina,
Yes, that's you.
Dr. O's niece. Am I
Okay,
the one
yeah,
you're referring to? Okay.
yes, yeah.
I'm sorry I dialed in late, but I wanted to ask whether you covered REPTs and PTs versus putting the properties in an LLC versus REPTs. Because for an LLC, there's a lot of tax and accounting and all of that, versus for the REPT that you don't necessarily have to file, annual taxes and stuff like that. So I wanted to get your thoughts, one versus the other.
You're half correct because the LLCs, if they're income earning, yes, you're going to have to do some taxes and so forth on them. But what we do is we do it in disregarded entities because all these assets that you own, we don't want to create more of a headache for you. But disregarded entities don't require a tax return to be done on them, so it makes it really simple at tax season.
Okay.
Yes.
Thank you.
So, okay. I think Auntie Tower, you have your hand raised.
Yes, ma'am.
Okay, go ahead.
Okay. First thing from what the Zoom users said, Mr. Gibb, what's the full meaning of REPT? She said, what's the I don't know what that is. Can you?
It's the Real Estate Protection Trust.
Thank you. My other question is, are there assets that you don't have to put in your trust and they are safe? Like you can't put all your accounts in a trust. You have beneficiaries. Are they not enough? Are there other assets that you can't put if you have annuities and other stuff like that?
You anything of value you would want to have in that trust. And it's just the checking account itself. It's not, that's all it is. It's just naming what it is.
So your beneficiaries doesn't matter.
What's your question? I'm sorry.
Beneficiaries on your
beneficiary. Well, it does matter in the trust, because if you once you die, that becomes irrevocable, and now it will go to whoever that beneficiary is.
Thank you.
You're welcome.
So one question I want to ask, because we're talking about wealth, growing your wealth and protecting it. A lot of us as immigrants do send money home. If you're done speaking, can you lower your hand? Zoom user, Antitawa, unless you have another question, please lower your hands. Okay, very well. And I know that forming an LLC is like about $800. I don't know, depending on the state.
Yeah, it depends on what state. We're going to try to make it the most economical as possible. We put a lot in the state of Utah because it's only $25 a year to renew an entity in the state of Utah.
Okay, so can you talk a little bit about it? Because a lot of people send money home and it's after tax money. If they are able to create an LLC and that money that they're sending home can come out of that LLC, it would inadvertently become tax deductible for them as expenses or something like that, right? Or no?
That's a tough one, because you are sending that. You'd have to have a legitimate business purpose of what that money's sent to. Now, if it's a legitimate deduction,
most of them do it for caregiving of elderly parents.
Okay.
Or to pay for school fees.
You'd want to do that through income shifting through your family limited partnership. That could be a transfer of wealth and income that could actually benefit you in a great way. But the thing is, folks, when you get into our program, you will have access to one of our tax strategies, our tax strategists that will look over that all with you. And based upon your state, your situation, we have about 50 different researchers who do the research and then get back and we go through it with you.
Very well. Now, I only ask that for people who might be thinking, oh, I don't have a business. I probably don't have a whole lot to protect, but there are just other wealth generating opportunity for them or protecting. Mr. Ayomi.
So yeah, how are you, sir? Mr.
Good.
David. Yeah, nice speaking to you. I'm an accountant,
Yeah, you
and
too.
I mean, I came in a bit late, but then with the questions and the responses and the little that I was able to speak to, I would just want to say that I'll be reaching out to you, for some of our clients. I have clients that I'm already speaking to uh, in getting their trust done this year. So it's what I have at the top echelon of what I do to help us, our clients here strategize, for taxes. That's the last thing that I do with them. Yeah. So I'll be reaching out. I'll definitely reach out to Dr. O to get your contact, and I'll be speaking with you to see how we can help, some of our clients.
Fantastic.
Yeah, and thank you for a great presentation, even though I missed a whole lot of
You're welcome. It's important to everybody here in the country. If you have assets, if you need tax reduction, that's what we do. And so you're welcome. Thank you.
Thank you.
Daddy Ezogu, I've been looking for you. I know you're still stuck in the office. It's okay. There you are.
Hello.
How are you, Gibb? How are you doing?
I'm very good. How can I help you?
Yeah, sorry. I joined this late, but from what I'm hearing from the question and answer, you are with Legally Mind?
Legally Mine, yep.
Okay, okay, that's understood.
Dr.
Now,
Izuku, we met them together at Medkai.
yes,
Remember?
exactly. That's
At that
exactly.
program that we had
Graduating.
2 years ago.
Exactly. That's
And that was
exactly right.
why I felt the way things are going, we needed to bring them to
No,
medical
that's
with
that's
Dr.
that's
O.
that's very beautiful. Yes. Yeah,
Dr. Izuku is a cardiologist here at Johns Hopkins. We met your group together at
yes.
Medkai event.
Great.
Yeah, you guys did a presentation for our group in during the MedCai program for the residents and for people in the medical field for finances. Now, do you have legal representatives here in the state of Maryland? So, like if somebody is working with you, and of course, you always defer them back to the legal person because do you have legal representatives here in the state of Maryland?
Well, the way it works, doctor, is when if you get sued, you would have to go find legal counsel for yourself locally. But that counsel would call our office, and then we would break down for them how your blueprint is structured and give them the precedence of why it makes no sense for that lawsuit to continue. We've been doing this for the past 20 years. In 20 years, we've never had one. Well, we've only had one client go to court in 20 years. Everything else has been dropped. And the one client that had to go to court was just recently, and that's because they committed a felony. If you're not committing felonies, we can keep you out of court and we can get these cases dropped.
Okay. Second question. The $200 monthly, is that fixed at 200 or is there additional charges that go into that is not spelled out?
The $200 a month is for all of our clients who sign up at that time. During this time where we're at right now, that price will never go up. That will always stay at $200 a month, even if we have a price increase, and we have them about every year is what we have a price increase, but it would never go up. So you'd always pay that $200. That would be it.
Okay, and that $200, again, forgive me if I know I came a little late. Specifically, what are the services that somebody is getting every month for that $200?
Well, we're going to be your registered agent in whatever state we place these in, so you don't have any other costs there. We're going to do your registrations every year when the registration has to get done. We're going to do those for you. You'll pay for it with your credit card, but we're going to do it for you. But we're going to put them in states that are going to be inexpensive. Like I said before, state of Utah is only $25 a year to renew an entity. We're going to try to keep your costs down. We're also going to do the minutes for all your meetings on these different entities. You will have access to our legal team anytime you have asset protection, tax strategy, or estate planning questions. You can call and set an appointment with one of our attorneys, no cost to you. And every year we would want you to do a new tax impact plan and a new entity creation plan so we can make sure your assets are protected and make sure you maximize deductions with tax purposes. That's the basic gist of what that does for you, but we're adding things to it all the time. The bottom line is if laws change, excuse me, we're going to be your bird dog looking out for those changes and make sure we adjust with it so that your estate and the way your structure is will continue to work for you.
Thank you. Thank you.
You're welcome. You're welcome. I've got a few more minutes. What do we have any other questions?
Dr. Dija, yeah, just a minute. Dr. Dija has a hand raised.
And the water. Thank you and good evening. Are you able to take down the QRA code for now so we can see whoever's speaking?
What do you need?
Do you still need this QR code up?
This is for the
we're
handout.
not seeing the people that's been speaking.
No, we're good. I think they've seen it.
Okay, you can
enough.
put it down even though I was going to speak. I just needed to mention that. Good evening, everyone, and thank you, Gibb, for your presentation.
Yeah, and before you go on, the QR code is also in the chat box.
Yeah.
It's in the chat box also, and I tried it. Dr. Ajay put it up there earlier. Yeah. So you can put it down, David.
Okay. Well, I don't know how to take
You
it
don't
down.
have to
Put it
take off the
down.
screen.
It's up.
all
It's
right.
up.
It's all right. It's all right.
Okay, that's all right. Thank you again for the presentation. Thank you always, Dr. O. Thank you, Madam Lara. All right, I'm Dr. Khadija, pharmacist in the Medical Mondays home and also a financial professional. I saw in part of your suite all the items that you offer had, I didn't quite catch the screen of that, something about insurance and tax havens. I do know that for me, part of what we do in our community local, we offer business owners business executive bonuses. Was that what you're referring to? And if that's so, do you also act as a fiduciary in this case?
No, that's not what I was referring to. And
Okay.
yeah, we do not, we are not fiduciary in those cases.
I see. All right. Thank you.
You're welcome.
Again, this is Medical Monday. No legally binding advice is given. This is just an information session.
Perfect.
Take it, use it for your own transformation. Connect with the speakers, you know, and again, hey, everything we do is consequential. Not doing anything is also consequential. After listening to today's presentation and you're not sure where to go, make a call anyway, set an appointment to be able to make an intelligent decision whether this is for you or not for you. But the gentleman, Mr. Gibb, shared a lot of information today. And, you know, I can see why all his hair is gone. Because it's loaded with
It's a lot that gets packed in there.
It's a lot, my brother. It's a lot.
Amazing.
It's
You're
a
awesome.
lot. It's a lot. Very, very useful information. We appreciate you. Boss O, pass it on to you for your closing before the speakers
you still have a question in the chat box from Haman in the UK. Yes.
Oh, okay. Haman in the UK, it's been a long time. Where have you been? Where I don't see him. Okay.
It's in the chat box.
We have a gentleman saying that he's in the UK. Are there, and what are your contact details? Do you have anybody? You know what, can you ask your question? Because I'm reading it. I am based in the UK, David. Are there some similarities where individuals like myself abroad could make use of your services? Question one. And where are your contact details? Question two.
Okay.
Well, the contact details are going to be in that QR code. That's how you'll be able to get a hold of me. But I can also give you my email. It's dave@legallymine.com. You can get a hold of me that way. But as far as the UK is concerned, different laws. There are some similarities, obviously, but our program works here in the United States. If you do have assets here in the United States and you live in the UK, we can definitely protect the assets here. If you earn income here in the United States, we can actually save you some money on taxes as well. So it can work. It can definitely work for you, even though you live outside the country. But the majority of the benefits going to come from somebody who practices and works here in the United States.
All right. So the time schedule on your calendar, is that East Coast or is that West Coast? Because it doesn't give.
It'll be according to the wherever you're at in the country is where it'll adjust for you.
Okay. All right. Any other question, ladies and gentlemen? Okay.
I got one question.
Yeah. Okay.
And thank you very much, everyone, for great presentation and questions and all that. The one question I want to ask is, so which are the West states that you don't want to do business in? Not that you don't want to do business, that you don't want to register business in, so to say. Is there anything? I mean, I know it's not a good question, but just in case, so we can be watchful.
You have to, whatever state you're doing business in, you have to register the business in that state.
Yeah.
So, and that's okay. That every state has its pros and cons. what we're going to do after that is we're going to take all the assets that are in that corporation, whether it be checking accounts, investment accounts, equipment, those things are going to be stripped out of it. So that we want to make that entity or that business a red herring, meaning there's no real value to it. The only thing that should be left in the business is your goodwill, which is your customer base. And a customer base is not quantifiable and cannot be named in a lawsuit. So we're trying to strip it away so that at the end of the day, they look at it and it just doesn't make sense to sue. Because the bottom line is, and I've said it a number of times here, you take away the motivation, you take away the lawsuit. That's what it really comes down to. Make it not worth suing.
Good point. Thank you so much. Make it not worth suing. I appreciate
that. You're welcome.
It's a dead end. They just reach a dead end, right?
Yeah, exactly.
They get it to a dead end. So that's exactly what we want. We work too hard to lose our money just frivolously like that. So anyway, right. So the rest of you that have not asked a question, think through it. If you have additional question, please scan the QR code. Keep that information. You may or may not need it today, but keep that information, and we'll go from there. Boss lady, Dr. Veronica, you have another question?
So sorry, I know we want to close. This has nothing.
No, we're not in a hurry. We still have time.
Okay, good. Thank you, Mr. Gibbs. But this is about Mr. Yomide. Dr. O, you had him present a while back. I used his services, and I just want to say that if you're not having a good experience with your tax person, get on his calendar. He is out of this world. Like, I've never, since my 30-something years of filing taxes in America, gotten somebody that in-depth, like out of this world. And I see he's here, and I just want people to know that if you don't have a good tax person, you will wonder where he was since for your tax. I've already researched it.
That is that's a cheap plugin. How much discount is it giving you?
Oh my God. Auntie, I have to get closer to you. I didn't even think of that. I will need to make this a business. No, Dr. O, thank you for bringing Mr. Yomide. It's changed our tax life. Thank you.
All right. So, Mr. Gibb, you can wrap up, give us your closing remark, and then the boss lady would conclude.
Can I ask a question, please? Before you do. Thank you.
Okay.
Thank you. So, if you have a business already, but you need it protected, and you don't live in Wyoming or Alaska, Delaware, can you still start an entity and still protect that business through there?
Well, you can create the entity in the state that you're actually working in. Absolutely. It's not going to be, you can't register that in another state. That's because that's the state you do business in. It's kind of the same question that AJ just asked me, where you want to strip the assets out of the business completely. That you just want that business is most likely going to be the place you'll get sued at, but you want to make it so when they actually start digging, there's nothing within there. So all of the assets that are inside it would be stripped away from it. But yeah, you do want to create an entity. First of all, for asset protection, that's number one, but number two, for tax purposes as well. And we'll walk you through that and make sure you understand it.
It's like creating another safe deposit.
Yeah, absolutely. That's a good way to put it.
Thank you.
All right. So any other question? Okay. So Mr. Gibb, you see, this is a very large family, it's a very large audience, close to what you normally would get. There needs to be another discount for Medical Monday attendees. I'm not kidding, this is negotiation. There needs to be another discount, whether you're waiving $200 monthly fee, or you are going to give us a $300 discount of the cap. Let's make a deal. Because I want to incentivize people to call and make appointment in the next 30 days.
Well, I'll tell you what I will do. I'm not going to reduce the cost, but what I will do is I will guarantee the entire amount, meaning not only the $9,800, but the other $200 a month. If you can't get all that back in new taxes, then we'll give you the difference. So it'll end up costing you nothing either way, whether we save you the money in taxes or if we don't. But that's something that we don't offer outside of this Medical Monday. That would be something that you would get as an advantage.
Are you from Nigeria? Because you have that skill of just sliding out of what I just proposed. Where did we?
No, I wish we could do something more. We literally do not make much money off I think you can understand. We don't make our money from creating entities. Where we make our money is by doing a heck of a job for you. So you want to keep paying us $200 a month. If we can give you that value, because once we get it structured and set up, there's not a ton that we have to do after that. And if we can give you a ton of value, you'll want to keep paying it. And again, it comes down to, if you're saving this much and it only costs you this much, why wouldn't you pay that? Or pay this. And so, that's what our business model is. It's worked great for the years.
Understood. If the proof is in the pudding, then it's done. All right. Thank you.
Thank you so much. And like I said, it's going to be limited as far as what you can book right now. I will send another QR code to Dr. O that she can get out to you so you can book. And I'll try to get that to you as early as tomorrow morning, Dr. O, so that we can get that out and take care of that.
Okay. So thank you for coming. Dr. O, over to you.
Thank you so much. First of all, thank you, Madam Lara.
Yes, thank you, Madam Lara.
VP. You did, I mean, as usual, you were fantastic. Thank you. And David, you were phenomenal. Thank you so much for enriching us. And I'm sure a lot of us on this platform will be getting in touch with you and, share with family members and friends, because this is recorded, so that they can get in touch with you. And thank you for the discount. We appreciate it. We appreciate you beyond words. Thank you.
Yeah, you're very welcome. Everyone
you.
Have a great evening, and look forward to talking with you.
All right. Good night.
Have a good one.
You need to speak. Hey, before you sign up, you need. You can't just go like that. You need to repeat after me. I'm going to keep
pull him back.
All right, let's hear this. What are we doing here?
Okay. You're going to learn to say goodbye in Nigeria.
I love it.
Say Odaro.
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 Kachifo. Kachifo.
Kachifo.
Odaro.
You guys are awesome. You have a great one.